Welcome back to the Roadmap to Retirement podcast. Excited to be joined by Broc Buckles.
This is Roadmap to Retirement. Tune in for financial tips, investment strategies, and smart money moves to supercharge your retirement savings. Alex Neri, CFP, and guests are here to help you build your roadmap to retirement.
First of all, cool name. Is that your actual name?
It is, man. It was given to me. I think my dad came up with the name, although he spelled the first name without a K. And so driver's license branches, everywhere I go, no one has ever spelled my name. But it's okay. It's all right.
That can be frustrating. I like the double B, though. Instead of nice, like Chris B.
The alliteration, the BB, the Broc Buckles, yeah.
Yeah, the alliteration, Don Draper. Yep, that's a good thing. But anyway, we'll jump into it. So I thought we'd talk a little bit today about your story, how you got to where you are, and talk industry stuff without talking about the financial planning industry. I always enjoy those conversations. So kick us off with who you are, what you do, and then we'll start to talk about how you got there.
Yeah. So again, name's Broc Buckles. I am a co-owner of BC Brokerage, which is a firm that works with financial planners across the country, specifically fee only. But really what we do is we just look at what the need is, and we rely on other people to come up with a financial plan, what actually makes sense for the client. And the analogy that I always use, man, that I think makes it the most simple to understand is, like, you as the financial planner, you're the doctor of the financial plan, right? When there is an insurance need, as long as it looks good, you write the insurance prescription, and we're the pharmacy that fills it, right? So if it's a term insurance policy or a DI, we just take that off your plate and get it done.
Cool. Love it. It seems like there's more and more advisors that are getting away from doing the life insurance, disability insurance, and all that. And I'm in that camp. I rarely do it now. I don't want to do it. And I would be surprised if eventually I just let my license lapse and stop doing it altogether. Maybe there's a history lesson here, and I don't know the answer, but do you know why it is that financial advisors ever gotten into doing life insurance? It doesn't really make sense on the surface.
Yeah. So I think there's a big mixture of people that were doing an insurance that kind of started doing the investments. I can't remember what the law was called, but back when I was at Northwestern, like somewhere in the late 1900s, I think there was like a law that was passed where essentially insurance agents could now make recommendations and become investment licensed and do all of the above. And so there was like that mixed mash thing to where now you're doing financial planning and selling insurance and kind of all of the above. And then there's other parts of the industry where people don't do any insurance at all.
Yeah, actually, now that you mentioned that, I remember that being something that I studied for one of those tests that talked about those two worlds coming together for some reason. And like, I guess on the surface, it just doesn't seem like a real good business model. And I've heard other advisors make the argument of, well, if I'm going to do comprehensive financial planning, we're going to be talking about their life insurance need, and that's part of their financial plan. So I may as well be able to sell the policy. But to that, I would say there's so many things that are part of a comprehensive financial plan that, like, those same advisors are not touching. Like, I'm not going to go to law school so I can write a will. I'm not offering P&C insurance. Like, I'm not doing any of that. So why is like life insurance the one like sacred cow that we're protecting?
For sure. But yeah, and I think it's also like the conflict of interest thing, right? Like, that's what a lot of people will argue is and you've seen it, right? If you're staring down the barrel of recommending an investment account, or somebody puts X amount into an investment account and the commission's going to be $100 over there, if you put the same amount into some insurance products, the commission might be 10,000. There's also like that piece of it too that I think gets a little bit overlooked. And like, when you are out there doing both, there is inherently like a conflict of interest. And don't get me wrong, like, we do make a commission. That's how we make money, because I can't change the insurance industry before it's willing to. But the one thing that we really like about what we do is that we work with people and it's already diagnosed. Like, the need is, I talk to my clients, they need $1 million a term for 20 years. This is why they need it. Help us out. And then we just go fill it, right? So we like that because it's like a set of checks and balances where everybody's really held accountable.
Yeah, it's a good segue into the conflict of interest thing. So are you familiar with the term super Roth? If I called something, you're an insurance guy, right? So it's that's the thing, like in the beginning of my career, that it was usually the manager, the sales training person working with the new advisors.
Yeah.
You'd stand in front of the room with a whiteboard, and they'd be.
My guy must have been a fan of bodybuilding because he called it a Roth IRA on steroids, but same thing. Yeah.
Roth IRA on steroids, same thing. And for our listeners, what we're talking about is some kind of cash value life insurance policy. You came out of the Northwestern world and the whole life product. And the idea was like your sales manager telling you, don't sell your clients a Roth IRA. Instead, sell them this life insurance policy because there's no contribution limits and they don't have to wait until retirement to use it. Like they list off all these supposed benefits of the super Roth. And to your point about the conflict of interest, the massive conflict of interest is you're making that sales pitch in front of a room of 20-something-year-old financial advisors that can't pay their bills, and you're offering them a product that is going to pay them 80% upfront of the first year premiums versus the Roth IRA that they're going to get paid like a 1% advisory fee on
Right.
divided by 12 months, and they're going to get like $1 a month for the rest of their life. So
For sure.
conflict of interest. Would you rather make 10 grand today or $1 a month for the next 80 years?
And the other thing is like a lot of, and don't get me wrong, like I want to be very clear. And one of my best performing tweets I think I ever had was like, if your advisor is pitching you on a supercharged dual turbo infused like Roth IRA, that's not an actual Roth IRA. Like it's not an advisor, it's an insurance salesman. But I don't have anything inherently like against the product. So I think there a lot of times there are uses for permanent life insurance policies, right? Like estate planning, long-term care planning, special needs planning. If you're completely run out of other options and you're maximizing your 401k and you're doing a lot of other stuff, maybe you can look at it there. But there's so many like little insurance things that I heard early in my career that were like, investments are what gets you to the finish line, but insurance puts food on the table the first 5 years. And there's just this whole idea of you have to sell a ton of it. And beyond that, literally you're at a conference where people have ribbons down from their lapel collars all the way down to their Ferragamo leather loafers based on how much insurance they sold that month. So tell me you're not incentivized.
Yeah, I never blame the tool, right? It's not the product, but when you only have a hammer, everything looks like a nail. I was just talking with some other people about, I put a LinkedIn thing out there about all these like sales trophies I have from early in my career, and I'm sure you do too. And you talked about like the ribbons when you go to the conference and all those things that you got for selling proprietary product up front. And as you get older and progress more in your career and you get more jaded towards that, it's like, what do you do with these trophies? You can't see them right now. There's a pile behind me of trophies from AXA. I'm like,
do I hate these now?
I'm like, I don't want a client to see that I got a trophy for selling, a product that maybe wasn't in anyone's best interest.
100%, man. What I always tell people is like, if you're listening to this podcast and you're thinking, oh, these guys are hating on me, or this is what I'm currently doing, or this is where I'm at, hear me say this. I am not by any means saying that like you even know you're doing the wrong thing, or maybe you haven't even come to the conclusion. If you're compensated that way, I fully believe that eventually you can get yourself to believe that you're doing the right thing. And then once you're in that for so long, if I'm in this for 10, 15, 20 years, maybe I just am fully like, now I'm just like, I think I'm doing totally the right thing by selling everybody permanent insurance because everybody needs it. But at the same time, there's a lot of people that wake up and have that realization that I feel like it's really distasteful and I don't feel like I'm doing the wrong thing for clients. And I'm selling these things, and then 10 months later, they're falling off the books, and I'm having to pay back the commission because I was just selling something. Like I wasn't actually calculated in why I told the client they needed this.
Yeah, and there's, maybe somebody has a very specific niche market they work with, and a lot of those people need that product. Definitely possible. I think one of the things too is a lot of younger advisors that I've talked to are listening to these conversations, and they're at one of these companies that is training them to do it this certain way. And they say, hey, I don't want to do that. I want to get out, or I've Googled this. There's so much more information out there than there was when I started in 2012. And I think that you need to proceed with caution with that too, because you do need to drink the Kool-Aid somewhere to get started in this business. And if you're 23 years old and you want to quit working at XYZ insurance company because you found out it was bad, you're probably not going to get to where you want to get. So you might have to drink the Kool-Aid for a while, put your head down, get to the point where you're 4 or 5 years in, and then start to make a move.
Man, I'm not going to lie. Like I was into it, right? Like my buddy told me that he was like, we're going to be financial advisors for the summer. Now looking back, I realized like how crazy of a thought that actually was. But being a communication major and having no idea what that even meant. And then also had family members who had spoken highly of Northwestern and were Northwestern clients. I was like, man, I'm going to wear a suit. This is going to be cool. And then I've always enjoyed like dialogue, and that's why I was a communication major. Like I like the study of how people interact and talk to each other and decisions based on emotion and all of that. And there's a lot of good sales training there. The issue is then day one you show up and they're like, yeah, get the guy that was going to hire me for the internship. I came in with 150 names of like, and I'm like, Dad, pull out your phone. Mom, pull out your phone. And the last day he was like, for you to get this internship, you need 200. So like, it's conditional. Held the bone in front of me. And I'm like, okay. So I go home that day and I'm like, Mom, I need 50 more names or I can't do this internship. And I already have the insurance license. My poor mom literally pulls out her phone and gives me 50 more names of people that are just in there that maybe she has or hasn't talked to in 10 years. And so then like later on, you're like, oh, and then we ask them for 5 names every time we meet with them. And just like in the beginning, man, I thought I was really going out there and helping people. I really did. And then I realized that a lot of the things that I was doing, I was just a product of my environment and what the culture was there and what I was being told to do. And so that's why eventually I was just like, I got to get out of here.
Yeah. I remember doing the project. Like mine was just a project 100. I don't think I had 200. Maybe they set the bar lower for me. They saw me coming in. They're like, this guy can't do 200. Let's start with 100. And same thing though. I remember sitting at like my parents' kitchen table with their flip phones open, sorting through their contacts, like writing down names. And then there's like the weird reality once you started the internship program of being like, okay, now you got to call these people. And you're like, oh shit. Like
day two.
I wrote down the names. I forgot about actually like hi, my mom from yeah, okay, yep, I'm in college. Do you want life insurance? But
yeah, I didn't assume that you had any need for this. I just like to stop by and show you the type of work I do. It's like
type of work that I value in. Yeah, those are the days
for sure. I still have the red letter language, man, ingrained in my brain from like the sales training books because I just memorized all of it. So now when I talk to people, if it's like a policy that shouldn't have been sold, I can actually refer back to that and be like, did they say this to you? And they're like, that's exactly what they said. I'm like, yeah, that's out of the training manual. Yeah.
We sound jaded, but you know what? In hindsight, it was good experience. I look back at that. I know I wouldn't be where I am now today without doing that.
For sure.
And get really comfortable just with rejection and everything else. Because at some point you got to be rejected. So
no doubt. And I appreciate that, man. I really did. And there's still guys that I talked to that I worked with there and think really highly of. And I'm not here to say that there aren't good advisors there. At my particular office, there was a certain vibe that was maybe more geared towards just selling whole life. But I've talked to other people that were like, hey, man, ours really did feel like a financial planning, and most of the time it was term. And I was like, you're definitely the anomaly, but that's cool to know that there are people within that system. And yeah, like you said, Alex, the ability to take rejection, the ability to learn how to talk to people, the ability to be in those things, learn how to manage your schedule, make appointments on time. Some days I was driving across the state. So like, I literally was like, I'm going to be in Columbus, Bloomington, Indianapolis, and wherever else today. So yeah, absolutely. You can take a lot from it. It was just the realization that philosophically I didn't align with that anymore is why I decided to leave.
Yeah. It's so much of that networking was valuable too. Just like learning how to talk to other professionals and like the idea of getting referrals and all that kind of stuff.
Yeah,
it was good stuff. I wouldn't want to do it again, but it was good stuff.
For sure. Yeah, I don't regret it, man. I'm a firm believer in everything and every experience that you've had up to this point has made you who you are today. And so I wouldn't take back anything. But yeah, hindsight's 2020. And looking back now, it's easy to be like, don't do that anymore. When you're a kid, you're not even old enough to drink yet, or maybe you just turned 21. It's a whole nother deal.
Yeah, actually, I got in trouble for underage drinking at the first conference I went to. So
we had a kid jump off the bridge in Milwaukee into the river, one time, and then another one jumped off. I think it was like an awning to one of the restaurants and got his foot hung up in Christmas lights and was literally hanging upside down. So he got sent home on a train from Milwaukee back to Lafayette.
Oh, that's wild.
Yeah,
I went to the Milwaukee conference and I was 20. And I didn't get ID'd in college. And we didn't think that was a problem. I got a stern talking to when I got back.
Yeah, for sure.
That's all right.
That's how it was.
End of this recording. Anyway, so you left there, and now tell me more about your business now. So you gave us a little bit. Advisors, you're doing the insurance for them so they don't have to, or so they can.
Yeah. Yeah.
How does that work from getting it set up and stuff? Do you have certain carriers you contract with?
Yeah, honestly, just about everybody that you can think of that's not a captive carrier. So if you don't have to work exclusively for them, we probably have a contract with them. So obviously not Northwestern, not State Farm, but anybody that will broker out services. And so we recently, last year, we do life, DI, annuities, long-term care. And then last year, we actually added property and casualty, both personal and commercial, which is a beast. But it's been a lot of fun to learn and kind of get into that. So literally now we're basically offering every insurance product that's not pre-65, health insurance and Medicare. But yeah, basically the way that it works, and a lot of this has just been from attending like FPA, NAPA, different conferences across the country, meeting with a lot of people. We now work with over 1,000 advisors nationwide, and basically they get introduced to what we do. We show them how all of our systems work. We have a portal that they can log into where every time they introduce a client, they know exactly where that client's at the whole time. We file it away so that they have access to it and a snapshot of all the policies. And then beyond just the implementation and helping them out with product, we also do policy analysis. We understand like a lot of people have insurance backgrounds. A lot of the people that are fee only initially, like the extent of their insurance knowledge is what they learned in the CFP curriculum a lot of times, which is pretty broad, but it's not very deep. And so what we do is we'll just review existing policies for them and give them enough to be dangerous in the meeting and just objectively say, is this good? Does it make sense? And if it makes sense to help them out with something, that's what we do.
Nice. Okay. So you work with 1,000 advisors. How many people are on your staff? Like, how do you actually do that?
Yes. Keep in mind, not every advisor is sending you something every month. But so we've got myself, Peter, we've got Carmen, who's a PNC, like customer success specialist. And then we have Rodney. And then like we work through a bigger organization. So we have some assistants in the background there. But man, we're pretty lean, mean, and efficient. So one of the things I am not very good at, I always say, like, if you had any more than one Broc, like if Peter's the co-founder, I said, if you have two Brocs instead of a Broc and a Peter, you'd meet a ton of people and then nothing would ever get done. So it's really good that we have him because he's created so many systems, so much automation to where all these things talk to each other. So a lot of the things that were previously like manual updates are like just triggered. So in the portal, advisors have an account name, their clients are under their account name. As soon as we move that over, it reflects in their portal and they get an automated email update. Where when we first started, it was literally like sit down, look at the list and update every single person on what their clients got going on for insurance. Okay. So yeah, and people go through different things. Some of them are, if you had Jarvis on like the surge meetings, right, where like this part's for insurance and this part's for this. And we're just very efficient at getting it done, man. And a big part of it is it's really nice that a lot of the planning is done before it gets to us. So we just really have to fill the order.
Yeah. Okay. So you're the top of the funnel guy. You're bringing them in. And then you guys have the whole system you built that deals with the follow-up that you would never do yourself, probably.
I would never do it myself. That's always been a crux of mine, man. That's always been like something I've never been great at. Like I love having conversations. I like getting people engaged. That's really exciting for me. But like the small detailed stuff, I'm not very good at. And I'm happy to admit that.
You got to know your strengths and your weaknesses. That's
absolutely.
Yeah, cool, man. We're getting to the end of our time. I appreciate you coming on today. My kind of closing question I'd like to do is if you had a magic wand and you could change one thing in our industry, what are you changing?
Man, the transparency. Like I would love to see people be more transparent and more honest with individuals and not take advantage of people that don't know any better. So like those people on Instagram and those people on TikTok that are preaching a product like a supercharged IRA or Roth, supercharged Roth or super Roth. Is that what you called it?
Super Roth. Yeah.
Right. Like, be like, you have to disclose your compensation. You have to disclose what you're going to make on it. You have to present alternatives. That way you just have more informed people who don't end up 10 years down the road not understanding why they bought a product and they've got that coming out of their bank account every single month. More transparency.
Transparency. Love it. Cool, man. Well, Broc, thank you for your time today. Where can people find you if they want to get in touch?
Yeah, so I'm on LinkedIn, Broc Buckles. It's BROC. Buckles is just like it sounds. I think on Twitter or X, I guess it is now. It's Broc_Buckles. And then Yeah, check out our website if you ever want to learn more. We've got the Only Fee Only pod. Yeah, check us out.
All right. Awesome. Thank you for being here, and we'll cut it there.
Thanks, man.
Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of Alexander Neri. It does not necessarily represent those of RFG Advisory, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by Alexander Neri or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Alexander Neri and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.